Why is UPI such a unique thing in the world? I haven't heard of a similar success in any other country. Did India just get lucky?
I mean, every 8 out of 10 transactions are on UPI.
Is cash dead?
If the cash is not dead, then can we create a digital cash?
Help me understand NPST as a business.
We never raised funds through debts. We never diluted an equity. So we gave about 9,000% return to our investors.
Deepak, welcome to the Founder Thesis Podcast. Tell me about your journey of becoming a founder.
I wouldn't say it's an accident, but at the same time, I would say that it was a decision which happened very late. I was working for a consulting company. Then I worked for an IT company. Uh, During that period, I really found that there are things which I was trying to do, and there are a lot of efforts which I was trying to make never worked out. Not because it was not workable, but because I felt that there was no one listening to it. So there was this opportunity which we were working on for a very long time. Um, for
This is
about
at
8 years,
Banco.
I was sorry, yeah. So I worked for Frost and Sullivan, and then I worked for Spanco. During this time, I was actually trying to read 2G, 3G market. How the growth would happen. And then I was even looking at the internet penetration in India. So I was actually part of the ICT domain, information and communication technology. Along with the penetration of internet and penetration of phone, there was also a launch of iPhone during that time, and the smartphone era would start. So that is also something that was going on. Parallelly, I was also going through the national e-governance plan. For anything to work, infra is very important, and what is government doing about it? That is what I got in 2006 National E-Governance Plan, where government had national mission mode projects, 27 odd, and they had a plan to set up data centers. They had planned to lay networks across India. Parallel to that, you have 2G, 3G evolution going on, and then smartphone coming. So it was quick to understand that entire world will definitely come down to this. Ultimately that's where the applications will be built, services will be delivered. You'll find people going to that particular place. You don't have to run around for shopping. You just have it on phone. So there are a lot of use cases, a lot of stories going around globally, but it was about to come to India, and that is where I felt the need of getting into this. Uh, just before we started, there was this question running in my mind. What happens if you fail? So I just told my wife that, let's try it once. I'm just 30, 31 right now. Let's try it once. If at all we fail, we fail once, and then I have a lot of time to recover. So it's way too early, even now. So let's try it out. And it's been 11 years now. Uh, Things worked out well. Uh, Partners and all those people who believed early, all those guys who came together, really thankful to them.
Uh, what did you want to try? Because you wouldn't have gone into it thinking, "Okay, I want to do entrepreneurship. Let me quit and figure out and explore ideas." I am assuming you would have narrowed on something when you
Yeah,
decided to quit. Yeah.
yeah. So I had a lot of material with me. I mean, to start with. So basically, when we started, it was about setting up phygital centers across India. So the idea was, can we digitize the physical centers who can deliver government and business services to citizens in rural, semi-urban India? So that was the model with which we started, and we were three of us. Uh, but
There was
all
a ITC initiative, e-Chopal or something like that, right?
each opal was known that time. There was this model which was going on from the government of India, which was common service centers, setting up one center every 6 villages. That was the plan. So I don't remember the number, but this was in lakhs. I think 6,26,000 villages divide by six. So that's the number that government came up with. And this
This
was
would do
the
like land
initiative.
records or birth records, death records.
Everything from the yeah, yeah. So for government services now you can go to these centers. They will be the authorized agents, and they'll be delivering services. So that was the first initiative. Now there we could not make great money, but we were able to do Aadhaar enrollments. Now Aadhaar enrollment is where we got paid every transaction, and that's where we started building the cash flow. But back to your question, what made us think about this entrepreneurship? So what ran in my mind was very clear. Uh, there's a mobile penetration happening in India. This will peak to 100% and go beyond that in next 3 4 years odd. The technology will move from 2G to 3G, 3G to then obviously 4G. And while we were talking about 3G, there was a conversation about 5G in Japan. So that was also going on. Online marketing, online space, shopping, all of that had really caught up in US. So all that was going on. And then I thought this is the right time to get into this. And during this journey, I was actually working for the banking and financial sector. So IT as a background, mobile banking was something which was very new.
Your client was a bank who was doing a like a digital transformation, and Spanco was doing the IT infra for them, something like.
Yeah, so Spanco actually launched SBI Freedom that time. So there was this mobile app, SBI Freedom, mobile app. It was a mobile banking app. NPCI started somewhere in 2000. I mean, obviously long back, but 2010 is where it is said to be IMPS story coming up.
What
Now,
is
digital.
NPCI's history? Just give a quick primer on that. Like, why was it created? Who created it? Like,
Okay, so this is my learning and my obviously understanding. I don't want to get into nitty-gritties of that. Uh, See, NPCI for sure, the thought
NPCI
around
is National Payments Corporation of
Corporation
India.
of India, yeah. Now, the thought around this is very clear that, for anything to work successfully, you need to have a seamless payment flow in the country. And for that to work, you really need to have real-time payment ecosystem. That is where the regulator thought about, getting one body brought in by multiple banks. So all the banks pooled in, and then they decided to create an entity, and that is how NPCI came in. So NPCI was entrusted with the task of building the real-time infra of the country around payments. And that is where you'll hear about products around check truncation system. Like, so one small project, let's say the check takes about 3 to 4 days to realize. Can we bring it down to same day? To do that, can we have a play of digital ecosystem? So there was a product called as check truncation system. Now, going beyond that, can we do a real-time payment which works 24 by 7 and can be executed within a minute? So then came IMPS, immediate payment system. So that's 24 by 7 started
Mm.
working.
And for
And that
people
is
who are
where
not
the
aware, like the system before that used to be NEFT, in which
NEFT
I think
RTGS, yeah,
there would be like
absolutely.
some hourly settlement during working hours only kind of a thing.
True.
And hmm.
True. So I keep thinking, so NEFT and RTGS, obviously NEFT and RTGS is where so idea was to get the online transaction, and that's basically because you had internet banking in place. So you work in an office hour, you have what would be the business case where the fund transfer will be higher. So business cases, you have B2B payments, you have corporate payments, so you have large ticket size payments. So then you have RTGS for that. And then NEFT is where you log in into internet banking and you make the payment. So
Hmm.
you don't log in at night, right? You don't log in late. And obviously, there wasn't such need during that time. But now that the economy was changing, where the transactions were supposed to process quickly, and you were expected to have the business running 24 by 7. Now, in that case, you need 24 by 7 payment. For that, it was imperative to get someone like NPCI in place, and every bank should agree to such kind of technology.
Hmm.
And that is where IMPS came into picture. So all
NPCI
of this. Hmm.
is a like a protocol body, like say for the internet, like HTTPS is a protocol set by some protocol body, but they don't run the internet. Like the internet is run by, let's say, AWS servers or Azure, whatever. What is NPCI?
NPCI is not a protocol body. So ONDC in fact is, but NPCI is a proper switch. When we say switch in our terminology, it's an application that sits at center and then it does the interoperable transaction. They have a proper technology to create an interoperable payment ecosystem. So
Okay.
every single bank can go talk to NPCI about debit credit transaction, and then they will ensure that you have a routing around this particular transaction. So
So
NPCI will then have
NPCI would
multiple
be like,
products.
say, a Mastercard. Like Mastercard is a way for
Yeah,
payment
yeah.
to
So
be processed. Different context, but Mastercard is running the pipes. Similarly, NPCI is running the pipes.
absolutely right. In fact, the
Okay.
close answer is Rupee. So Rupee is also run by NPCI. So in reference to MasterCard and Visa, those who understand that story, so Rupee is run by NPCI, which is an India's product, and it has all debit, credit, prepaid, all the possible, payment instruments on
Hmm,
Rupee, running on Rupee.
hmm.
Similarly, you have IMPS and then you have UPI. Now, these are non-card products, but digital in nature. Then you have CTS, you have Aadhaar enabled payment system where you use Aadhaar as a base for validation and then deposit, withdraw certain funds. So these are multiple products that they have. So obviously they have a lot of responsibility around building nation and creating the digital story about India. So that's what they do. Now, this was so we started end of 2013, and then
At that
IMPS
time,
was 2010 story.
okay,
Uh,
UPI had come out then, or it was
no,
okay.
no,
Hmm.
UPI is 2016.
Yeah, right.
2015 is when the guideline came, and 2016 April is when the pilot launch happened with few closed user banks. Uh, so now imagine if you have so much story with you and you know what's going to happen in future. You have worked in consulting, you have worked in the real execution. So it was obvious that if at all there is someone who had a risk-taking appetite, and who really thinks that whatever has been thought or whatever ideas had been brought in would have worked really strong, then I felt it is very difficult for me to continue working the way it is until you really try it out. And that is where I mentioned, let's try it out. It fails once, but later on, let's go ahead. And in fact, this was majorly pushed by my boss, who happened to help me out, with the entire thought process. He became my mentor, and he was the one who actually came up with this entire thought around this entrepreneurship. So all of this taken together, we decided let's create network people services technologies. Now when
Nice.
we started,
NPST. Okay.
yeah, so when we started this company, it was network people services technologies. The idea was to create a network of service delivery centers by use of technology to serve people.
Hmm.
So the first model was obviously around the phygital center, which I mentioned. And from there, as and when we moved ahead, the best part about NPST is that we never stopped with one single model. We realized what is next. And this particular business, which we started earlier, became the feeder of operating margin in the organization. Now, we didn't want to raise fund, neither we wanted to, go for debt. The idea was very straightforward that we were still building the ecosystem, and we had very, very strong idea about what we actually intended to achieve in the digital payments. And we were way too early there. So Ashish is a hardcore finance guy. He's CA ICWA. He's another co-founder. He decided that, Deepak, let's push the organization at a bootstrap model and let us try working on the operating margin. So you keep thinking about what business can be brought in, what kind of operating margin can be generated. Even if it is less, let us go bootstrap around it. That's
I
where we
think
started
anyway,
building
there were hardly
NPST.
any VCs around at that time, right? 2013 would have been a
We
year.
got an offer way back to sell the, not offer exactly, but the discussion started. The discussion was around selling the center business because we almost did about 1 crore Aadhaar, and that was a great revenue booster. We picked up that money and then we invested into what where the heart was, obviously digital payments. So although we started end of 2013, but the NPST that you're seeing right now, the story that you're seeing right now, actually started at the end of 2015 odd. So 2 years later. So those 2 years became feeder to actually build NPST. So
That 1
somewhere
crore
in,
enrollments happened in those 2 years.
yeah,
How
1
much
crore
did you get
enrollment
paid
happened.
per enrollment?
I
Ballpark.
think it was somewhere around mid 25, 26 or something like that, and of
Hmm.
which we used to get some 10, 15%. Rest used to go to the center guys.
So this was
So
a asset light. You were the technology provider for the center. You were not actually running the center.
no, there was, in fact, we were not the technology guys. It was entirely by UIDI. UIDI is now everyone knows Aadhaar. So they provided everything. We were majorly the guys running operations on field. So set up about 2000 odd centers, ensure that there are right enrollments, target being achieved, services being done. There is no overcharging, reporting to the UIDI. So all of that we did. Parallelly, we had like three, four guys sitting in office doing a small coding around mobile banking, around Android testing. So we were in fact in that Symbion era. So
Right.
from
Symbian
there
was the
moving to
Nokia phones used to use
yeah,
Symbian.
so
Yeah.
Nokia phones and you see.
Hmm.
So there was no common operating system. So I'm lucky. So when I'm talking to you, I'm actually trying to realize that, there's so many things happened in those 5, 6 years. There was this government's plan around going to e-governance. There was this 2G to 3G journey going on. And then at the same time, the operating system were getting standardized with Android and, iOS, and then smartphone getting launched. So all of these happened during that time.
And Geo.
So Jio to बहुत late आया. I mean, it was very late,
Uh,
but I think Jio majorly on the 4G journey. That is where they came. But the content was lot clear in our mind that what exactly has to be built and where exactly we have to go. So we picked up the. In fact, there was one more operating system which was Windows,
hmm.
brought in by
Again with
Microsoft. That did
Nokia.
not
Yeah.
work.
Yeah.
Uh, and Windows was picked up by Nokia.
Yeah.
So unfortunate. But anyway, so we stuck around testing Android and iOS. We stuck around building some pieces around it.
So
And
you
then
had seen that SBI Freedom app business of Spanko, and you were essentially thinking that we can do that kind of a business where we can build the mobile app for a bank.
yeah, my intent was not just mobile banking app. That was indeed the beginning. But but the question that was in my mind that BFSI segment itself is going through change. So taking a cue from what government was planning to do and how the internet is moving, it was very clear that ultimately the users will start using internet banking, mobile banking. In fact, the account which I opened, my personal account, which I opened in ICICI Bank when we started the company, initial 2, 3 years, I was entirely into internet banking. Till date, I have never been to the branch. I mean, since 2013, I have never been to that branch wherever the account was opened. They came to our office. That change was visible. It was very clear that, That's not how the banking will happen. And mobile banking during that time was just about fund transfer. You transfer fund, you do balance inquiry, you check your statement. That's all. There are
Hmm.
hardly about 10, 15 odd services on it. But the question was, what about the services which exist inside bank but not available on phone or on internet? So that was another question. Then if
Some
24 by
examples
7,
of those
I
services.
mean, FDs,
Okay.
loans,
Hmm.
or RDs. So there are so many such stories which are yet to be brought into the
Hmm.
application. So obviously, what was being done in my past organization before we started embarked onto this journey, uh, that was the trigger point for us to, for whatever has been collated till date. And then after you see SBI Freedom, and then oh, see, this is happening, and now it has to be done. So somewhere in 15, 16, when we restarted our journey around digital payments, and then from there, 16 is when UPI happened. And when UPI happened, it was like very clear now. This is something that will change everything. So 18, 19 odd, we were very clear that we are completely technology company. And then we changed ourselves from network people services technologies to NPST, where T is prominent. So that NPST still remains, but today the T has become prominent. Then N. So that's how the entire journey. So we rebranded ourselves. The logo was redesigned. Yeah.
Hmm. The so 2015, when you heard about UPI, did you start winding down that Aadhaar enrollment business? Did that continue? What did you see as the
It was
UPI
by force.
opportunity? Okay.
It was by force. In fact,
Hmm.
we were asked to bring it down.
Why is
The
that?
decision was taken I think most of the enrollments were done across India. And there are a lot of decision being taken around, security and compliances. And then at the same time, the cost to maintain such a huge infrastructure across country, taking so many updates and MIS going on. I mean, I'm just talking about basics. And then at the same time, being at a risk of, what kind of enrollment would happen after this. So a lot of decision taken, and it was forced to push it only in the centers which were either owned by the government, they were captive in nature, or banks. That was the idea. So initially we thought we can probably tie up with bank and start doing some business with them, but that did not fly. Obviously banks were like, this is again an added headache on us, and there's no revenue coming in. This is not our
When
core, this is not
this
our business.
when this happened, you were totally reliant on Aadhaar for your revenue. That was the single source of revenue.
Ha, so
So, I mean, didn't it freak you
bad
out that
times.
my business is going to die? Like the thought must have crossed.
So we always knew this business will die because the enrollment was very high, and that is where we differentiated ourselves from the others. The core was not always to continue with what we were doing in Aadhaar and the other business. The idea was to generate some bootstrapped model, get some cash flow, deploy that cash flow into the the organization which we actually wanted to build, and that is what we did. So it was always in plate. By then, luckily, we had already built a good cash flow. uh, the entire organization moved from the operation driven organization to tech driven organization. And then we also got certain contracts. So, I mean, we started with Canara. From there, we kept on adding more accounts. So, slowly, and,
When did the Canara account come? Canara Bank, you're
it
saying,
was
right?
2015.
Okay,
And
okay.
then,
And
then
what was
from
the
there,
business you got from them? Like, what was the contract on?
very small thing. I mean, convert their GPRS based SMS based banking to GPRS based banking. So
What
again,
is
this
GPRS
is something
based?
in okay. So earlier like I said, internet penetration was very low. The technology was not that evolved. But SMS is where most of the transactions were flowing. So although you had an app, but its backend would work on SMS. So on an encrypted
Okay.
messages.
Okay. Okay.
So
Okay.
it's very hard to believe
Mm,
it, but
mm,
that's how it worked initially.
mm, mm,
And
mm,
then
mm.
from there, moving on to, completely internet based and, scrapping the entire SMS backend. So that's what we did. From there, then we completely migrated to a full blown application. 50 odd services, I think 50, 56 odd services on the application.
With Canara
It was
only,
very
or
new, Canara.
how? Okay. Okay.
And
Good.
then UPI
So
happened.
essentially, Canara's mobile banking platform, you kind of built that out.
Yeah, so we are managing this for last 10 years now, and it has gone through almost three evolutions. First one which I mentioned, later on we moved to microservices to ensure the scale and capacity is really great. So this is something we did, and then about 3 years back we migrated this to super app. So super app is where you have the ability to consume products and services beyond your core and then give the seamless experience to the user. So
Like you
we,
can book a flight on your
yeah,
mobile banking app, or
yeah. So
okay.
banks' core services would be your loans, FD, RD, which I mentioned earlier. Apply for new account. But then you can also tie up with a third party who has the aggregated services around flight, which you rightly mentioned, buses, or again you can have a direct tie up with IRCTC.
Hmm. Bill
Technically, there are
payments.
multiple ways to bring them onto super app. So how beautifully we can design the solution wherein come what may, any kind of partner, any kind of technology they may own, can we bring them seamlessly on the application? So that was the problem we were trying to solve. So that is what we did.
What can you zoom in on? You said that the first change was moving to microservices. What does that mean? What was it before? How does microservices help?
So
What is microservices?
usually, so technical, so now along with payment, there is also technology evolution. Okay, so initially, most of the pieces were written in monolithic architecture. That means you have like one container, well, to make it easier for everyone, and you put all the services inside one container. So you have like, let's say 20 odd modules, different modules. So there is an authentication module where you authenticate a user. There is a transaction module where you are transacting. There is a acknowledgement module wherein you are giving the confirmation. So there can be so many different modules. Okay. So let's say 20 modules brought into one single container. Now, what you can do is in microservices, you create small services, microservices, and each module becomes an app in itself. So earlier there was one app having all 20 modules. Now there are 20 apps, different modules. So tomorrow, let's say you want to scale so fast that your one service is about 80% of the entire transaction, which may be your, let's say, fund transfer. Now you give maximum allocation of resources to fund transfer rather than giving it to the other services, which are very just 5%, 2% of the entire volume. So what it does is, if at all you want to scale horizontally, I mean, you want more utilization around few of the services. Now you are free to do that. In the earlier cases, you had to do it for the entire application. Now you can actually focus on those pieces which actually need scale. If you do this, then your ability to build a large and a platform which has the ability to transact in millions. Now that's what you are able to build it. So today, I think in Canada we are processing about 5.5 crore plus transactions every day. So we are talking about almost 50 to 60 million transactions. That's majorly because we are into microservices model. So that's what we did somewhere in 2018, 19. Now that's the industry norm which everyone has adopted. So whenever there are smaller ticket banks, I mean, if the volume is 10 lakh odd, maybe for the entire month, or it is just 1 lakh a day, yeah, absolutely fine. I mean, you don't need such a huge ecosystem. But wherever the scale is higher and you have a larger aspiration that you want to bring in, let's say you are sitting on 56 services, you want to add, 200 more services. You want to add multiple more users which are non-bank. user, but you want to give them certain services. For them, you will build a very different story in the application. For you to have a freedom around what kind of services to be built, what kind of users you're bringing in, and then the volume that you're projecting for the future, you need to have a different tech stack altogether.
Okay. Uh, when NPCI brings about these innovations, like say first IMPS, then UPI, uh, how do banks adopt it? Do they have an in-house IT team, or do they typically work with vendors to adopt?
So, so Akshay. So the thing is, bank is completely. So this is my belief that a bank is a regulated entity which has so much, to do as a responsible organization and being a financial pillar of the country, that their focus is so much around CASA. Their focus is so much around, managing compliance and the entire regulatory pieces. Technology is heart and core today for banks right now. However, within technology and the kind of applications which is being run, we know that the core banking solution is brought in by likes of Infosys or TCS or Oracle. So these are the guys running the solution. But when it comes to certain expertise around payments, if you start building it in-house, then what may so happen is you'll have to build an organization altogether to run that particular piece. Now, I'll take an example of UPI. At any given day, we do nothing less than maybe 150 odd enhancements, or maybe more than that in a year. Now, if that is the kind of enhancements or that is the kind of demand a particular product has, then it is always good to have experts who not only understands technology but who also understands the future roadmap. So in this ecosystem, NPCI has really, done a fab job in creating an ecosystem wherein you have technology service providers who keeps doing this job, who sits between bank and NPCI, and we are one of the technology service provider. Our job is to ensure that the entire upkeep or entire effort around scaling the digital payments and achieving the technology target between banks and NPCI is met. And that's why you have an ecosystem called as technology service providers who service banks and ensure that their core components like core banking solution or these components are untouched, and there is a separate ecosystem which focuses purely on digital payment system like IMPS, UPI, AEPS, NETC, National. That's your fast tag. So all of these taken together, there are organizations which will deliver those product to bank, connect it to NPCI, and at the same time maintain it so that there is real time transaction going on 99.99% uptime. And then at the same time, they will also ensure that whatever there is a planned around future for UPI or any of these products, they work very closely with bank and NPCI. So it takes away a lot of pain and pressure from banks.
And NPCI is like deciding who all are TSPs. Like you have some stamp of approval from NPCI that you are an authorized TSP.
Yeah, so NPCI has NPCI partner program under which you can obviously present what kind of solution you have built, and then do you have a compliant product as per NPCI standards. So once that is proven, every single implementation goes through certification process. So it's just not that you can build anything and then deploy it. Obviously, there is a layer of customization. There is also a layer of what a customer demands, but at the same time, the core solution which is being built, that particular solution has to go through a proper certification process. So if you can get that certified, if you can, comply to the switch requirements by a bank as per NPCI, then you are one of the partner.
Got it. Okay. Okay. So this, you know, how much of what you provide to a bank is productized? How much is custom built for that specific bank?
So when we begin the journey with any bank, almost about uh, 85% or 90% is productized. But as and when we go ahead, if there's a large bank or someone who has an aspiration to really build business out of it, the customization flavor goes to about 30, 40, 50% also. So for example, Canara, we are there since 2016 on the UPI stack. Uh, I would say that there's whatever we are building right now, whatever development we are doing, about 60-70% development, or to be conservative, at least 50% of the development is on demand and not just around switch. Like demand from merchant, demand from branches, demand from customers, the upgrade or the technology uplift, and then at the same time performance, the partner ecosystem, all of that taken together. The moment we start a journey with a one particular bank, it's a compliant switch that goes into the bank's ecosystem, and then later on you keep on adding flavor. So it depends on the journey that a bank wants. It also depends on the time spent on that particular switch. So that's the overall journey with customization.
Okay, okay. So essentially, what most TSPs would be doing, I'm guessing, is that you have a core switch technology, that switch you sell to a bank, and therefore the bank can do the UPI transaction. And then you also have white labeled offerings like a mobile banking or a loan or a FD or those kind of white labeled offerings, which the banks can choose to adopt once they have built a relationship, built trust, etc. So this is typically the TSP model.
Yeah, that's the TSP model wherein we have multiple products. UPI is core. We are working around, I mean, we are now doing a lot of development around ONDC. We are doing a lot of development, not part of NPCI ecosystem, but yes, ONDC is something that we are working. We are also working with NBBL, NPCI Bharat Bill Payment Limited. So there's a separate entity which obviously has been built to bring in the aggregated businesses, so which is like Bharat Bill Payment Services. So that's something that we have built as a switch vendor to bank. And then we are also building certain stories around the corporate payments, which will work on BBPS ecosystem. There was this requirement around RBI's online dispute resolution, which has to be interoperable. I mean, multi-channel. So that is also something that we have built. So there are a lot of such products as a technology partner we provide to bank, which are around payments, and then gets customized beyond certain duration or certain aspects.
Okay. I want to zoom in on some of these. Let's start first with UPI. Uh, what is what was the innovation of UPI? How is it different from IMPS?
I mean, just imagine that you are on a smartphone era. You have to do a shopping on a particular website. You go there, you shop, and then you make a payment through NEFT. And then you wait for another day to check whether the payment has been successfully credited. And then the transaction would, proceed. Today, there are like, I don't have the actual count of e-com business, but per day there would be crores of transactions happening. Imagine if all of this settlement happens on NEFT. And imagine if, all the consumers who are buying online are given only an option to do it on NEFT and RTGS. We will never be able to scale the kind of business this India or the economy this country needs, right? So for this, it is important that we understand that there are certain challenges because of which the IMPS came into picture. So IMPS became 24 by 7 product, and then at the same time, the response time was like in seconds. I remember that, the question coming around, can we respond in milliseconds? So ideally, if the response is within 10 seconds, 2, 3 seconds, it serves the purpose of the online, requirements. Now, e-com is one use case. We are talking about services. We are talking about government payments. We are talking about so many transactions today, which is not just on internet banking, but also on your, payment gateways. Now, for payment gateway or something like a mobile banking solution to work, uh, the entire solution was built on a very closed loop model. Okay, IMPS is interoperable. In fact, the entire solution is created in such a way that all the banks can transact and there can be a settlement happening uh, very next day. But the transaction is executed today. So that's the entire journey. So a merchant may get money next day, but your amount is debited, the success is confirmed, and then merchant is very clear that I will get this fund.
Hmm.
They have a very clear understanding around that. So they will obviously deliver service even before the settlement is done. So that's how the IMPS works. And then imagine that the IMPS works only on your mobile app. So you have an ICC account and then you have to transact on IMPS. So you need to open your iMobile and from there you use IMPS and make fund transfer to your friend.
For which first you have to add a beneficiary, and
You have to add a
right,
beneficiary.
it's
You have
cumbersome.
to yeah, you have to download an app. You have to add a beneficiary. Can you go to now you're using some other bank app also, or you're using maybe some other different uh, instrument? Okay. Can you use ICICI account from that particular application and make fund transfer to your friend? No, that's not possible. That's where the restrictions were. Second challenge is IMPS was a push transaction. That means you are making a payment to your customer, but sorry, your merchant. But does merchant have an ability to request for the payment? That was also completely missing. So there was, in fact, a thought around bringing M2P as a payment channel. In fact, it existed in IMPS. We have P2P, which is person to person transaction, peer to peer. So I make a transaction to you, that's P2P. If I make a payment to, let's say, Flipkart, so then that's a P2M, merchant transaction. There was a thought around M2P, so merchant to person. So that's what was being done. But ultimately, what question came to mind was, how exactly we are going to scale further beyond this particular ecosystem, and that is where the the discussion happened around why do we need account IFSC? Account FSC exists for any bank as an identifier, right? But that's also the number sitting inside core banking solution. Why do we need that? Why can't there be a different identifier? So why don't I have Deepak as an identifier? Why don't I have Akshay as an identifier? And can we also the interoperability inside exists, but can we also create an interoperability around the application? So why not do an ICICI account transaction through a third party application? Why not do an SDFC or SBI transaction through a different application? So that was also a question mark. So that is where the restrictions were. A lot of restrictions initially. And then when UPI came in, obviously IMPS was the uh, not just test bed, but also the fundamental product available basis which the UPI evolution happened. However, when it moved on, use cases were so strong that UPI today is no more a payment instrument, but it in itself is an ecosystem which has multiple payment instruments. So when
Hmm.
I talk to a lot of guys, I clearly say that don't consider UPI as a payment channel. Consider that UPI has become an ecosystem which has multiple payment channels. You begin with account IFSC as a transaction, then you have prepaid instruments, then you have credit cards, and then imagine we are also talking about credit lending, using overdraft as an option to make a payment. So it has covered all the spectrum of the payment instrument. So that's the beauty of the product which has been.
Why did banks get on board? I imagine a bank could feel like I don't want my customer to use any other app. I want him to stay in my own app. Why should my customer use Google Pay, PhonePe? Uh, did that happen, or
Initially, when the UPI was launched, you're right, it was just banks who were launching the UPI apps. So
and I
there was a
think
lot of
Bheem
effort by
was
banks. Huh?
something like I think there was one Bheem app or something also, right? In the
No, no. So Beam was later. So I'll tell you. So all the banks who were brought in UPI, who were brought into UPI ecosystem, they launched a separate app. So almost every bank had a UPI app. So later on, it was very taxing and difficult to manage the application because you see, ultimately it's an interoperable ecosystem. A bank is launching a separate application where the user is transacting from their bank account plus they are able to add other bank also in the same application and transacting from that app also. So there's the stories both the ways. A, why will bank, so back to your question, why will bank allow uh, someone like Google Pay, PhonePe to transact from their application? But if you're not part of the ecosystem, then you will be out of the ecosystem and users will not be using your bank account. So the entire decision moved towards customer, not with bank. The decision makers were us. We decided who are better service providers to us, who can actually listen to my problem statement, where can I lay my trust, and still own a bank account where I want. Now, this is a win win for everyone. I mean, you cannot expect that banks will burn cash the way fintechs do because fintechs have a larger vision building the payment ecosystem. Banks have a larger vision around building the entire financial ecosystem. Now, there you're talking about loans, you're talking about deposits. You have your balance sheet on asset and liability. Here we are talking about solving merchant problem,
user
solving
experience.
customer problem,
Hmm.
creating user stories, and then generating revenue. A better business model around it. Both are completely different. Once this is understood, so fundamentally this understanding has to be created. So the moment you have this understanding, everyone are very clear who has an important role to play around payment, who has an important role to play around financial services, and where exactly someone has to contribute. So all of that is well understood now. So
Okay.
I don't think fintechs are considered as competition to bank, but
Hmm.
it is well understood by banks that for us to also scale, if we have fintech partners with us, then for sure our penetration in certain businesses which they are driving will be larger.
Hmm.
And fintechs have realized that the the licenses remain with bank. That is where regulator is comfortable with. So we have to work very closely with bank, and we have to create completely new use cases and solve certain problems in the market. So that's how it works.
Okay, okay, fascinating. What you're saying is that because there was so much customer adoption, so banks had no choice. They either adopt or they lose the cash which customers keep in the bank, because banks earn a lot of money purely by virtue of customers leaving their cash in the account. Like savings account
Absolutely.
hardly has any interest rate, so you want
Absolutely. So
money
imagine that
in.
you're raising fund. I mean, fixed deposit is nothing but raising fund, right? Which you
Mm,
deploy as loan. So you're raising fund, you're paying, I don't know what would be the interest rate right now, 6.5, 7, 8% on. And now you have fund in bank, in a current account or savings account. What is the interest you're paying? Hardly any. So it is almost diminished. So that's the gap. So the fundraise at 6 to 7% versus balance in the account, which is you're paying your cost, maybe I don't know what percentage. I don't want to quote wrong figure, but if at all, let's say the cost for the sake of this conversation is 2%, 3%, you're still saving those 3 to 4%. So that's how it would work. And then when you tap, so this is a very interesting case now. So someone like large payment aggregators, those who transact thousands of crores every day and settle about thousands of crores every day. What if you get that 1,000 crore in your bank account as an overnight deposit? So that is where banks get an advantage to tie up with such kind of fintech partners. So getting that 1,000 crore of an overnight float further gives you an added advantage of saving against what you would be paying for, FDs or RDs. So that's how it would work. So that is one use case wherein banks and fintechs can work together. The other problem is, you have ERP requirements. Let's say there are about, you know, 7,000, or let's say I'm just throwing a number. Large bank may have about 1 lakh odd schools, and let's say schools. You hold those accounts, okay? But they're using some other product for collecting fees, and then it comes to your account. Imagine if that fees comes to you after 1 day. But if a bank ties up with an ERP partner and then says that I will back you, you give ERP to all my schools, whoever has account in my, in my bank. So can we empower them? So now you're giving end-to-end service to a school from a bank. Very interesting, for the product which is not built by a bank, where their focus is to ensure that they are getting funds in their account, and ERP's focus is to generate revenue from the services. That's that's the case.
Okay, okay, fascinating. There was this Mark Andreessen said software is eating the world. I think now it's more like fintech is eating software, because for a lot of software, the monetization is fintech.
I, that's because that's the end transaction, right? You do anything you do, ultimately it will convert into a transaction. And when it converts into a transaction, you use payment ecosystem. So fintech is in position to solve that problem, wherein you do shopping, you buy ticket, you pay for government services, you make online payment or you make offline payment, you travel abroad, whatever you do. Ultimately, it is a transaction. Anything you do, except for non-financial transaction, wherein which also leads to a financial transaction. So you do a balance inquiry, or you check what is the fund available in account, obviously, and then from there you make a decision what exactly you want to do with this funds. You want to invest, you want to loan it to your friend, or that kind of decision is being taken. So either there are financial transactions or there are non-financial transactions creating decisions for financial transactions. So that's how the entire journey is. So
Okay,
if that's the case, so in fact within fintech there is Paytech. So you have payment technologies which will obviously drive and innovate how the payment works seamlessly, and then what more use cases and what more problems can be solved. Over Paytech, you have ecosystem that can be built by fintech. Now, this is where you have multiple ideas and lot of innovative thoughts coming in. What if there is an auto pay as a payment product? Okay, let's say there is an auto pay wherein you are creating a subscription based collection. All right, so eNash. So over eNash comes UPI auto pay. What if you create a solution for solving the problems around the subscription, which has auto pay in it? Now, in this entire system, you have payment technology, but on top of that, you have fintech, and there's no bank here. Only when the auto pay needs to connect to a bank ecosystem is where the bank will come. So, bank continues to focus on building, ramping up their assets and liabilities, and then you have payment technologies building the layer, and on top of that, you have fintech, which is actually creating the use cases. That's how the ecosystem would work.
okay, okay. Why is UPI such a unique thing in the world? I haven't heard of a similar success in any other country. Did India just get lucky, or is it the you must have heard this, that India skipped over the landline generation. India never had much landlines. It straight away jumped into mobile. So your disadvantage becomes an advantage in a different time. Is that something like that happened? The
So
that we didn't
I
have anything.
I don't know how much I should speak about this, but I have a very interesting analysis around this. Uh, uh, so we were in paper currency era long back, right? And then you had Britishers who left English in India, and obviously we adopted that. It was not because we had obviously with the kind of skill set we have since beginning, the kind of work that we do. uh, I mean, our, let's say, two generations back, these guys believed in, you should study hard, you should really have some degree with you. uh, so consider that you have language with you, and then you have skill sets with you, which is brought in by your parents. You have to ensure that you do your engineering well. You have to ensure that you do your stuff well, and then you have a country which is sitting on a low cost labor, speaks the same language, and has an ability to code, and they have gone to colleges, and there is no jobs. So what do you get out of it? You get a great opportunity to build your softwares and solutions in this country. And that is where, I feel that the entire software journey is a combination of those 60, 70 years which, the country has gone through. And then I go back to the same point. When this journey was going on, you had paper currency in beginning. Then came your plastic money. Obviously the evolution would move from paper to plastic, and then all the banks, same thought. If you go and read Visa Master story, all the banks come together and say that the transactions are increasing, there's a huge requirement around how the money should be stored, and we don't think we can keep anyone can keep dollars or such currencies with them for a very long time in their pocket. Can we get a secured system? And that is where the plastic card came. So Visa, Master, all of that. And then my belief is that wherever you had US going with relations, plastic card always followed them. And then the entire world obviously started using cards. Okay. And then we also started moving to cards. So now there's a combination that there is a story of evolution from paper to cards, and then you have engineers, and then you have software developers, and then you have English running with you. So you have got great thinkers around here. So you have the evolution globally going on, and then parallel you have all these guys sitting in RBI, you have guys sitting in government who are way too concerned. So hats off to all those visionaries who never let go the financial pillars of this country to the wrong hands. I mean, you always had RBI taking decision around the currencies, taking decision around the monetary policies, and government was taking decision around the government policies. So you always had that great institutions working, in parallel. So the decision around monetary policy, the decision around evolution was being taken by the regulator. Now, this structure over last 70 years allowed them to build something like NPCI, allowed them to, bring in a very strong ecosystem around, banks to move from physical to digital transactions. Now you have the evolution story around money. You have the great minds available in this country, which has evolved over last, 20, 30 years of software journey. And then you have a regulator who has complete control over monetary policies. And then you have government who is pushing everything to create a great economy. Now, if you have such a combination, then for sure it becomes a an opportunity for people sitting inside and building a story like UPI. So I would say that there's a lot which has happened to arrive at UPI. And then the moment you arrive at UPI, you realize that people were trying to solve the problem. So again, it is an evolution. 2010 IMPS happened, 2016 is when UPI happened. But actually the story started picking up in 2017-18. IMPS, we were trying to build M2P, which is merchant to payment system. Now, because you did not have the ability to do merchant to payment uh, ecosystem and evolve that in IMPS, you had to build a separate instrument. And that is where unified payment instrument came into picture. When when you have freedom to choose the application. So again, it's an evolution, right? You are going through a mobile banking journey, and you have a captive nature of entry into digital payments. From there, you're moving to after solving the problem, if my instrument is interoperable, why not my users get a choice? Why do I need account IFSC? Why not have UPI ID? So all these questions were brought in by the earlier instrument. It was not an overnight thinking. So all of this taken together, obviously you have UPI. So I say that, so from paper to plastic, obviously you have US who led the entire evolution, and then you have China who came up with Union Pay. Obviously, they also wanted to move
What
globally
is
with their
Union Pay?
relations.
Union Pay
So
is
it
like their
is
Mastercard.
just like Rupee, you have, yeah. So
Oh.
you have their own payment, interoperable payment
Hmm.
system. So China, the moment they were, they got strong with their economy, they decided that with my relations, why not, there can be such kind of product which US had. But while all of these were going on, there was this innovation and there was this aspiration which was built in India, and it was so quick. It was so quick. There was no time for others to think to build such kind of product. So, I mean, I would say the nature of the product was brought in to solve the problem of larger masses, to solve the problem in the system. I mean, imagine if you need a pause of 10,000 rupees to accept the payment at a small Pantapri shop or at a small Kirana. How will it work? So it is either a cost on a merchant or cost on a bank. So how do we solve that problem? Do we have a unique QR code system? You just need to scan and make a payment. So it was about solving that particular problem. So the moment you did that, your penetration was very high. So a digital payment to work, you really need to have a great acceptance ecosystem. And the moment you bring that acceptance cost from 10,000 rupees to 1 rupee, your penetration is very high, isn't it? So that's how it works.
So the fact that India had a strong independent regulator and a government push towards growth and a talented workforce knowledgeable in English and software is not unique to India. I mean, there are a lot of countries which have this, right? Western countries. Still, is it that India didn't have enough plastic? Whereas in the West, the problem didn't exist because everyone had a card. But in India, that was not the case. Plus, as you said, the cost of the POS machine, uh, maybe the fact that India needed an affordable solution.
So Akshay, I believe that of course this kind of force, I mean workforce, this kind of ability to around softwares and all exists globally, but we were the early adopters. We actually started long back, whereas others started later. So we have moved up the value chain. If you see, we are not just doing services. We are also got into product. We also got into data centers. We are also got into knowledge based services. And we are also in fact part of certain R&D and the innovation labs. for global companies. That is because we were early adopters and we have moved up this value chain, which I just spoke right now.
Mm,
So I would say that, how quickly we got into this particular ecosystem. Secondly, the policies and the need of the masses, that has to be well taken care. Now, even if there is workforce available, similar workforce available in the other countries, but what kind of progressive policies you have and what kind of problem you want to solve and what is your intent, that makes a lot of difference. So, or else you have world's greatest oil reserve and you're still Venezuela, so that is also possible. So it's not just about the talent pool, but it is also policies that play a very, very important role. I mean, why would a regulator take a pain to talk to all the banks and say, why don't you all come together and pool in to create a real time payment ecosystem?
mm. I guess
You participate into it.
no, I was just saying that maybe the right way is to look at the real innovation as IMPS. UPI is IMPS version 2. Like IMPS was what really spurred the innovation, and a better version of
IMPS
IMPS is what
is
UPI is.
IMPS is something which was, so IMPS was the first one to make 24/7 payment and respond within seconds. So that's obviously you're right, uh, and I agree to your fact that it's a trigger. That's where, but nothing to take away from UPI because it's so unique and it goes way beyond the thinking what IMPS had. Majorly because you see, IMPS was focused on account-based transactions, which money residing in your account, but going to a level where you understand the ecosystem or you build the flexibility so well that today you are transacting your credit card payments on a mobile app by scan and pay on a QR code. Now, isn't that a great way to think about? I mean, you don't need a credit card, plastic card today in your phone. I mean, in your wallet. You just need to scan your credit card on a QR code. And that's a very interesting way to mention about UPI how it is working.
Mm, mm. So, how much does UPI cost the economy, and how much money does UPI make for the economy? Because as far as I know, there is no, or there's very negligible way to monetize UPI. Like say Visa and Mastercard, they charge 1 to 2% fees for being the pipes and enabling the transaction to flow through. But UPI is free for most transactions. So, what is the P&L statement of UPI?
Uh, so I would slightly differ in this. Yeah. So one thing is I agree with the fact that um, there's a lot of bleed because UPI does not have MDR, obviously,
And
but
MDR is a merchant discount rate,
merchant
basically.
discount rate. I mean,
Basically means that
that's
the
the
fees
fee we
charged,
charge to.
right? Hmm.
There's a fee. So for every transaction, there's a fee which gets charged to a merchant. Merchant takes a decision whether they want to get it from their customer or they will pay from their pocket. Many a times, MDR is embedded into the price MRP, which is, let's say your MDR is 2%. So your overall cost of product will entail certain cost, 2% cost around MDR. So if at all you're making a payment to credit card. One best case is you go to a smaller, I mean, I have experienced this. You have go to a smaller jewelry store and there you flash your credit card. They will say, upfront, give me, I'll charge 2% extra. That's because they have to pay that. It's not embedded there. So, yeah, so back to your question. So, of course, but there's a bleed in the overall investment that one in has to do overall in
How much is the
UPI.
bleed?
Because
Like, how much would a bank be
I don't think
investing
I can have the right number with me. I don't even
just
have
for
the
a
number which
single
I
bank?
can.
Okay.
It's very difficult,
Hmm.
Akshay, because it differs. Like I said, na, It depends on bank how they want to take UPI as a case. For example, there is a bank with which we are working. They have built the ecosystem such that they can consume. I mean, they can consume the services, UPI services, and they can expose it to their customers, mobile banking customers, or any other customer wherever they can expose UPI, or they can expose the services to merchants who can open bank account here, or they can expose the services to government entity and yeah, and get those funds also here. So so it's up to them how they want to explore this. Now here the calculation is that you cannot charge MDR, but at the same time, because you cannot charge MDR, you are compelled to innovate and you're compelled to build different models via which you can generate revenue. You can generate a value added services, or you can solve certain problem
Give me some examples.
riding on UPI. So like I mentioned about ERP, okay. So we were thinking so we are planning to launch this, and as in you have this typical case of jewelry stores wherein I don't have the right percentage with me, but let's say one third of their entire sale happens through monthly collections. So if you go buy something and then they will ask you to, why don't you pay 2,000 per month? Pay it for 11 months, 12 months will pay from our pocket. It is nothing but
Yeah, yeah.
8% additional over
That
your
kitty
payment.
system. Yep, yep, yep.
So yeah, so 22,000 becomes 24,000, and then you buy the product. So
Hmm.
that's a great way to increase your sales. But
Yes,
you do
and
not
it's a
have,
savings product also for like an
yeah,
informal savings product. Hmm.
yeah, you get, let's say, 8% or interest rate, and then you buy gold, so which you can save it for long term. Now, in this case, it is, do we have the product? Do we have the auto pay facility on the spot, wherein while buying the this particular scheme, you can pick up your phone and you can allow the user to approve it and make the payment. It's not Nash, right, where you need a scan copy of your check. What will you do then? If can you open the scheme? No. Then he will go back home. Then he will come back, or he will ask for the photocopy from home. Give it to me on image, and then you give it. So you don't do Nash here. You need to have something which is real time, and you create a real time auto pay. Now,
Nash
can we
is
solve that problem? Nash is an NACH, which allows you to, so that's a different product altogether, which allows you to create a
monthly debit or some.
frequency,
Okay.
yeah, a proper frequency, when exactly the debit can happen, what amount to be debited. So it creates that subscription based model on it. Now, UPI allows you to do auto pay real time on the UPI ID that you have. On top of this, if I built a certain solution which solves their problem around customer engagement, customer acquisition, it allows them to build certain uh, use cases around discounts, around new schemes, and give that product to the jewelry store. This guy will be happy to pay me a convenience fees of 10 rupees because I have helped him with all those solutions. He'll not pay me for the MDR. He'll definitely pay me for the onboarding process, for the hosted application for which I'm spending on infra. He'll pay me for creating discounts. He'll pay me for the promotion that he's using from my application. So that is how you start building the product. So I would say that scarcity is the mother of innovation, right? We know that, right? So now, because there is no MDR, you'll find all the fintech, Paytech running behind such use cases and trying to create the solution. So that's about one piece. The second piece is, how do we solve the problem for banks and how do we solve the problems for these guys? So can there be a reconciliation system wherein you bring down the manual efforts and make it automated? So your cost towards recon goes down from, let's say, if it is about 50 paise, goes down to, let's say, 7 paise or 8 paise. At least you're bringing down the cost, so you'll be ready to pay that. pay for that rather than paying 50 paise. So there again, so either you bring down the cost or you generate certain model wherein the revenue can be created. So this is possible on UPI right now because UPI is almost about, let's say, 78%. I don't know the latest number, but 78% of the total digital volume in the country. And if that's the touch point, I mean, every 8 out of 10 transactions are on UPI, you have to bring products and services on UPI. Then you survive. So that's the story so far.
Is cash dead?
No, not at all. In fact, it will still take more time and it will still take more products and innovation to happen. RBI came up with a digital currency concept. The idea is how to see if the cash is not dead, then can we create a digital cash? So digital currency is about converting your paper currency into a digital currency. So in UPI, you're actually transacting from account to account. You're not keeping currency in your wallet. So you use your account number to transfer fund into your account number. So it has gone from SBI to Canara Bank. Okay. But in digital currency, you actually go to your bank account, withdraw the money, keep it on your phone. That money does not remain in bank, it is on your phone. So there's so much effort going on to reduce the cash exposure in the system, and for that there are much more such innovations to be brought in. So now the question is, can we transact digital currency offline? Then it's very near
Hmm.
to the cash.
The cash
And
experience.
then
Hmm.
yeah, and then uh,
Will it
UPI,
also give
how do we
anonymity? Like one of the things with cash is anonymity, right?
traceability? It will give you traceability.
Okay.
It's not anonymous.
It's not
So it
anonymous.
can be traced. It's a blockchain technology.
Hmm.
So again, it makes no sense for the regulator to build something
Is anonymous.
which
Hmm.
cannot solve the current problem.
Hmm.
So
Hmm.
if there
Hmm.
is anonymity and people want to maintain it, cash will stay there wherever such needs exist, and wherever there is no challenge with traceability, use it. Use digital currency.
Okay. Okay. Fascinating. Um, so this. How is UPI going global? Because so far it's basically NPCI is like consortium of Indian banks, and so the Indian banks who are doing the settlement between each other. But I also read about UPI going global. How is that happening?
So so obviously, I'll not get into the policy level discussion what RBI, NPCI are doing with other. They are they might be doing some stuff. I can actually tell you the UPI global journey. So for sure, when you go to other banks, like I said earlier, also US, China, they there are countries who have tried to take their product globally with their relation. Similarly, you have Rupee and UPI going globally, okay, with our relation wherever we can, wherever it is possible, and then obviously the adoption would happen. So that's the thought under which UPI Global also comes into picture. Now, in UPI Global, the first problem that we are trying to solve here is Indians abroad. They cannot transact in India. I mean, when they come to India, or they cannot transact sitting outside for any Indian payments. Okay, can we solve that problem? That's a quick thing to do, right? So the first thing was bringing uh, 18 odd countries, I guess, on UPI International platform, and wherever there are NRE, NRO accounts, which are not a normal accounts in India. So your NRIs and all those guys holding account in any of the Indian bank, they should be able to use UPI. They should be able to use that particular account and make a utility payment or education fee or make fund transfer to family. Those kind of transactions, can we get those transactions on the UPI platform? And it's a very big use case. Indian diaspora is really big. Uh, the fund flow is very big. So if at all we do this, then obviously banks from India who have branches outside, obviously they will get empowered. And other banks, if at all they have accounts of Indian diaspora, they can also think about being part of the UPI ecosystem, because that's where the transition is. So again, it goes back to the customer. If the customer is strong, then obviously the supplier will ensure that your product, your customization, your tweaking is everything as per their demand. So that's the first step. Second step is, can we be part of the local growth story? For that, if we partner with, let's say, if UPI goes to a certain country, let's say an African country, and there the economy is growing, and obviously there is a need for digital payment as a stack. So can we come in and help you with your digital story? So you don't have to re-innovate, you don't have to redo everything what we have been doing for last maybe 20-25 years. So uh, so so we bring all of that to you. So there's a great amount of respect towards India's regulator in the global forum. All these countries consider us as guys who have solved problem for masses. We have not built problem. We have not built solution to solve a problem around how to keep the currency in my wallet. We have solved the problem around how do I penetrate in rural masses? How do I ensure that bank accounts reach everywhere, wherever possible? So the vision of the government is, you see JAM, right? Jandan, Aadhaar, and mobile. That I believe is the biggest infrastructure story globally, which has brought India here. I mean, if today we are 40%, more than 40% of the global digital payment is all because of this. So there is
Wow.
Jandan, there is Aadhaar, and there is mobile.
Jandan is
Now,
the
when you
account opening drive
is
by the
is
government.
the account
Hmm.
ideally free
Hmm.
account. I mean, you don't have to keep deposit and all. So you have to. So you should have a Jandan account. What kind of technology or what kind of policy can be brought in to make Jandan a success? Then you have identity of an individual, irrespective of what kind of PAN, whatever you own, you should have your identity with biometric. And then, do you have a mobile phone? If you have a smartphone, fine. If not, we will still create a solution for the feature phone. So if this three combination is taken, jam, then for sure we are laying a very strong infrastructure which is not visible, but very strong infrastructure in the country. Now that is not technology decision; it's policy. Now, when you go global and you have such kind of thought with you, you have lot of respect. That is where if NPCI goes global, for sure, UPI as an instrument or Rupee as an instrument, we are either trying to solve the problem around the customers that we currently own, Indian diaspora, uh, or we solve the problem of the nation where we are working together. And then, if so, then what exactly can we do to move beyond the Indian diaspora? So that's how the journey has to be, and that is what is being done.
What is the account aggregator framework? Is this also an NPCI
No,
initiative?
so yeah, so uh, I'll answer this with a use case. So you have, let's say you're applying for a loan in HDFC and you have an account in Axis Bank. So now you'll ask for this huge collaterals. Okay, you'll ask for bank statements. You'll ask for the collateral, or you'll ask for whatever details you need. Uh, a customer may take 2 weeks, 3 weeks to bring those documents, but ultimately it is a bank statement lying in Axis Bank, which an HDFC Bank needs. What if HDFC Bank takes a consent from the customer that I can pull this bank statement from Axis Bank? if the customer has given the consent, then is sitting on the desk right there of the loan, the guy who's processing the loan, and he gives the consent, goes online, and from account aggregator model, if it is linked to his system, can pull the statement from Axis Bank and can process the loan. So
Hmm.
account aggregator is about how do we aggregate the banking uh, services. How do we aggregate those documents, or those products which is required within the banking ecosystem, or even the fintech ecosystem? How can we use that? So if at all there is a use case wherein you need multiple bank statements to predict the capability of the user to make a payment towards loan, then then you don't have to go to multiple banks or multiple credit card entities. You just go to one single spot and you get everything. That's account aggregator. Not with NPCI, it's a separate product altogether.
Who's behind the product?
Uh, I I'm sorry, I don't know, but obviously this is also an RBI initiative.
Okay, 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 okay. Uh, but this hasn't taken off, right?
Not exactly.
Are you involved in that? Like, are you a TSP for that?
So we decided to get into account aggregation long back, apply for it and become one of the aggregator. Is it possible? I mean, we were just thinking around that, but I guess we were not qualified that time. And then secondly, the UPI story happened. So we never got time to go back to the account aggregation. So, hmm.
Why didn't it take off? Because I mean, it's a powerful use case, right? Like, basically data sharing. Hmm.
One is data sharing, लेकिन we also have to think कि uh, how how is it evolved? How has it evolved, or what else is required for it to become a success? So, do we have a lending ecosystem strong enough, or do we have, the use cases where account aggregator can become a feeder? Okay, and if account aggregator has to become a feeder, then the story down the line has to be strong. So I believe that account statement was one of the strong product for sure in the aggregation side. Uh, but at the same time, uh, you know, I think there was a lot of problem which was being solved by the lenders. Further, the use cases around account aggregation were not very strong, or I would say we did not come across such kind of requirement. Where do we use it exactly? So the story which I mentioned about pulling out the account statement, beyond this, what, where exactly is it needed? So those were limited. Second, I believe uh, digital lending, and bringing down the journey for processing a loan to from about, let's say, 15 days to about 2 days or 3 days. So that is still going on. It's still not done. So that is still going on. So not all banks are still in a position to execute loan ASAP, or there are some beautiful products around pre-approved loan basis the statement, but these are all ETB. I mean, I have
What is
access to
ETB?
my ETB is existing to bank customer.
Okay.
So I have an account in ICICI. ICICI is in a good position to actually identify what kind of pre-approved loan I can give. So that's again where you don't need account aggregation. But at the same time, if at all there are larger stories available around it, which can push such kind of product, so I think it will take a shape going forward. But abhi to it is limited. At the
Okay.
same time, you have this ULI which has been launched, Unified Lending Interface.
Okay.
So
I haven't heard about that.
again, what problem it is trying to solve? It is trying to solve the problem around lending.
Hmm.
So मुझे डुप्लीकेट लगता है थोड़ा सा somewhere.
It sounds
wherein
very
if at all,
UPI inspired, na? ULI,
yeah, it
UPI.
looks like UPI inspired, but ऐसा है नहीं. It is again a feeder to ensure that the loan is processed quickly and all the problems around loan processing is managed. So all the APIs required to take decision around lending will be available at one place. And then let's say uh, you have to give an agriculture loan. Now, the data around agriculture loan or the users around the data around those users is very limited. So, what happens is for the primary sector lending, there is a target, and to achieve this target, you need to go to primary sector around farming, fisheries, all these sectors. अभी इसमें if at all the data around account aggregation, bank statement में data इतना है नहीं which can help you take a decision, then what will you do? Then you go to Kisan credit card, and then you go to some other instruments like his personal records, which can make you take such decision. So those are some kind of data available with ULI, which banks can take an advantage and process the loans. So मुझे थोड़ा बहुत duplicate लग रहा है इसमें, but I don't know how it will pan out.
And
Uh,
ULI is by whom? Like an RBI
Again,
initiative.
RBI initiative.
Okay. Hmm.
Our
Uh,
regulator is very progressive.
I think maybe the reason for account aggregator not taking off is the customer demand would be very minimal, right? As a customer, you take a loan once in 2, 3 years. It's not a regular
Hmm.
thing. Whereas payments you do every
Limited
day.
use cases. Yeah.
So maybe the demand from customers is not there to really push banks. Like you said, if customers demand it, then banks will have to adopt it. Okay, interesting. So you also mentioned about NBBL, BBPS. What are these?
NBBL is, eh, just around payment, you create interoperability in payment. There was an interoperability around
NBBL is
uh, biller.
an NPCI product.
NP, yeah, no, it's an entity in fact.
Oh, it's a okay,
NPCI Bharat Bill Payment Limited, not national.
okay,
It is
okay, okay.
NPCI Bharat Bill Payment Limited.
So it's a subsidiary of NPCI.
It's a subsidiary, correct.
Hmm, hmm.
Okay, so NBBL is okay. So what they do is beyond so UPI, IMPS, AEPS. These are all payment instruments, and there is an interoperability around payment. NBBL creates an interoperability between billers and the customer. So you go to any application, you go to Google Pay, you go to PhonePe, or you go to a local application. Now these guys can consume the services. So all the billers will be made available in one single application. So you don't have to go to 500 different billers and bring them on the platform. NPCI does it for you or NBBL does it for you. So NBBL will create a system in such a way that there will be operating units. So there is a biller operating unit and there is a customer operating unit. So so let's say one bank decides that I will get maximum billers on my platform. Now electricity bills, gas, or even societies, they can all become part of the biller ecosystem. And on the other side, customer operating unit. Now there they can extend the APIs to someone like Google Pay, PhonePe. So in the entire ecosystem, if there are let's say 10 different banks who have 100 different billers, for Google Pay, you will have all those 100 billers in their application without even going to each of those 100 billers. So that's the kind of ecosystem they have built. So this ensures that your transactions around utilities or any payment that you're doing is available on any application that of your choice.
Okay. How is it different from BBPS, Bharat Bill Payment System?
So sorry. So NPCI Bharat Bill Payment is the entity and BBPS is the product. So
Got it.
BBPS
Okay.
is what I was talking about right now. Bharat
Understood.
Bill
ठीक,
Pay.
ठीक.
Yeah,
Okay. Okay. Okay.
yeah.
Okay. So this is
And
like a
hmm,
aggregator platform which has aggregated all the
aggregator
billers
platform
so
for
that
billers.
there
Yeah,
is convenience. Okay.
yeah, absolutely.
Interesting. Okay. 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 Uh, so this is again something which you are providing as a service to
Yeah,
banks. You
yeah.
help them
So
to
yeah, on both the
make this
sides,
available
billers.
as a feature.
Yeah, so the
Okay.
biller
You help
side as
billers
well as
to
customer
come
side,
on the. Okay.
and then we also build applications. So we have ready apps, we have ready APIs. So anyone who wants to get into the business, and utility is like a not just mandatory but also a commodity for any application to survive in the market. So you have all the services, but you will also have utility payments of the in the application. So so these guys can use the services that we are providing.
And is there a margin for the person who's
Yeah, there is
billing
a
the
margin.
customer? Okay.
Yeah, there is a margin. So in fact, there is a proper, just like an interchange mechanism. When I say interchange, your MDR is divided into multiple costs. So there is a cost that goes to switching fee. I mean, the one providing switching services. There's a cost towards acquisition. There is a cost towards, issuance. So when I say acquisition, someone who has acquired a merchant. When I say issuance, someone who is giving, allowing the beneficiary based transactions or debit based transactions happen. So, so that's where the entire MDR is divided. So similarly, in BBPS also you have a cost uh, which gets paid to the agent institute. So, or I would say someone who is transacting at the point of customer. So, the one who is transacting at the point of customer is an agent institute who gets onboarded on customer operating unit. Now, customer onboarding unit's role is to ensure that these services are made available at the customer end. So they will tap with agent institute. So Google Pay can be an agent institute, and the bank from which they take the services can be the sponsor bank. Just for others to understand. So like that, any app provider can become an agent institute. Now there, uh, if at all you are allowing these services, you are actually spending in user acquisition. So you should get paid for that. So any electricity bill paid there or any recharge done there, there is a fee which goes to the agent institute via customer operating unit. So both of them earn. And who pays? The ultimate beneficiary, the biller. The biller pays to the biller operating unit, and then it comes to NPC, and then there is a cost which gets divided.
How much is
That's
that
how it works.
discount rate?
It's not a discount rate, but some
The
fees.
interchange
It
fees.
does not. It varies from some basic paise to not more than 2 rupees or 3 rupees, something like that.
Oh, it's not a
And then
percentage. It's a fixed
no, no, it's not.
number.
It's not
Okay.
on the
Hmm.
because that's different, right? It is BBPS is not a payment instrument. There
Okay.
will be a cost towards payment instrument. That's different. You can use credit card, debit card, or you can use UPI. You can use any product to make a bill payment. So these are two separate ecosystems. Uh, and further, there is a convenience fee. So you're allowed to charge a convenience fee if, yeah, to the customer. So you may be paying a convenience fee on PhonePe app if you're seeing PhonePe app. So I don't know. So I've heard about that. There's a convenience fees around it. So you're there's a limit to it. I think that I remember last was 10 rupees, I guess, or maybe a certain deviation based on the biller. So that's how the fees is defined. So there is a defined fee at backend which gets distributed across ecosystem, and then there is a convenience fee. The decision is taken by the one who has onboarded the customer, and there is a cap to it.
Hmm. Okay. And you are also doing ONDC, you told me. What is
Yeah.
ONDC?
So ONDC is like you began with, it's the protocol. Uh, Very interesting case. It started with solving the e-com related problem in the country. The thought was, if So it's a marketplace, right? So e-com is a marketplace wherein you're selling your products, or let's say you're selling a swimwear in a shop, and now you can sell it online as well. So for hosting your product there, and to sell your product at certain discount or whatever you can, by keeping it in your warehouse, and saving the retail cost, you can pay certain fee to the marketplace basis which your products will get sold. Now that's how the entire e-com industry would work. Now here the cost to the seller, the guy who's selling a swimwear, can go from 5% to 30%, 40% also. The who is the ultimate guy taking an advantage is the marketplace. Now with that thought, the idea was, can we democratize the marketplace the way we have democratized the payment instrument. Now that's how the ONDC happened. But later on, the idea was that beyond e-com, uh, what more can be brought in, what more ecosystem can be built in. So today ONDC has two sides: one is supplier, another one is buyer. Supplier is where you have all of these guys, let's say uh, Hindustan Unilever or Procter and Gamble, or all of these guys who have something to sell will go to ONDC platform by being into a supplier stack and having a supplier app. So there will be a technology partner who will build the seller application for these guys. There can also be shop owners, small shop owners. Those who have shop right now selling it here, they are selling it on Amazon. Now they can sell it on ONDC also. But who are the buyers here? The buyers will be owned by guys who will acquire customer. And who will acquire the customer? It can be anyone having a payment application or shopping app or whatever it is. So then there is a separate ecosystem, which is a buyer ecosystem. Now, this buyer ecosystem will have a technology partner who will build the buyer application. Now, let's say I have my own application, which is TimePay. So we also have a product called as TimePay, which is a B2C app. That's a future journey that we are building right now. A lot of aspiration around it. Now, this application is a payment app. On this application, you have ONDC as a solution provider. So there will be one buyer who will bring the products and services made available on ONDC by the suppliers. So you have different suppliers, and these suppliers will come to ONDC platform. Buyers will consume all the APIs, whatever is available, and show those services on the buyer application, and this will be then made available here. I'll explain this with an example. So let's say there is a guy at Kolhapur who is a manufacturer for Kolhapuri chappal, and somewhere at northeast in Arunachal, one wants to buy a Kolhapuri chappal. Now, if this guy goes to a seller app provider, then says that I want to be part of ONDC, he'll get a portal or something where he can maintain his inventory. And then someone in Arunachal Pradesh has built a application which this guy has downloaded. Now, when he's searching online and he searches that app, he also finds that, oh, there is a Kolhapuri chappal available here. So there is supplier ecosystem separate, buyer ecosystem separate, but ONDC ensures that all of them are on one protocol and they are following the guidelines, and they all go through this gateway. So the gateway is being built here. That's how it works. Now, for this to be a successful case, neither a supplier can manage logistics nor the buyer can manage logistics. So then comes partners in the ecosystem. So you have logistic partner. So the logistic partner will ensure that anything coming to his platform, he will pick up the Kolhapuri chappal from Kolhapur and will send it to someone in Arunachal. And from there, the logistic partner will pick up the chappal and deliver it to the buyer. Then there is a payment partner in the ecosystem. Similarly, there are multiple partners in the ecosystem. So that's how the entire ONDC framework is designed. Uh, we are working on financial services also right now. In fact, we are working on mutual fund story. That's a very interesting case. I mean, we are in the era wherein, I mean, I remember that my parents, when I started earning, they said, Deepak, buy insurance. I said, why? That's a great investment. When I grew up, my so the one who would come to our office as a to manage our investment, he would say that insurance is for insurance, it is not for investment. And so then we move towards mutual fund. Okay. And then from mutual fund, now the era is where people are interested in investing straight away into equity and taking that risk. So we have gone from insurance to mutual fund to equity. So if at all you save 500 rupees or 1000 rupees a month, and it is instantly available on your phone where you want to invest, and you have mutual fund available giving great returns, and you don't want to take risk, it should be on the phone. So financial services has insurance, it has mutual funds, I think it has personal loan as well. So these three categories on ONDC. So you have e-com as a category on ONDC, you have financial services.
I think
They're
you have
doing something.
restaurants also, like
Yeah, yeah, food delivery,
food
absolutely.
delivery, and
And
even I
then
think
transit.
transport also. Yeah.
Yeah, yeah, great story. Transit, ride-hailing apps, and your metro travel, all of that, tickets. And then I heard that they were also experimenting around quick commerce. So there was a very recent story because it was ONDC was built to solve e-com problem, and the entire traffic is moving from e-com to quick com. So obviously they will have to start thinking and building, solutions around quick commerce as well. So that's the only thing.
I- is ONDC meaningful today in terms of the transaction volume? See, UPI is obviously meaningful. Is ONDC meaningful?
See, everyone has a different role to play. Like BBPS is about aggregating utility services. UPI is about democratizing payment ecosystem. ONDC is about democratizing the marketplace and the similar services, democratizing the financial services marketplace, all of that. Uh, so there is a chicken and egg story. So which I have learned way back when we were running the centers. Okay, so if you have all the services with you, then you have buyers. Like you'll go to Amazon, right? You'll not go to someone who has just 5% of Amazon inventory. Or for someone to make this bring all these services on the platform, you
You
need
need
to have
buyers.
buyer.
Yeah.
So
As a
ONDC is the whole
seller,
story here.
you will go where there is
Yeah,
demand. Right.
absolutely. So
Yeah.
now for I believe that ONDC will definitely become a success going forward. It is just a matter of time wherein the right inventories are available. The buyers will start flocking so that it saves their cost. It
But
brings
I've
down their
been
effort
hearing
in
that for
aggregating.
2 years now.
It will take more time. It
Okay.
will not happen so early
There's
because
like a 10-year
uh,
journey.
I'll tell you for mutual fund, when we are integrating, I'll not name it, but the one who provides services in market uh, has about 22,000 odd instruments, and here there is just about 1,200 right now. So, but the development journey, the I would say the support and the freedom to innovate and uh, you know uh, bringing services on the platform and generating revenue is is much better on ONDC compared to the other one. So if this 1200 goes to 3000, 4000, or let's say even 5000 one day, it is still good enough for the buyer to buy mutual fund from the buyer app. So that is possible. So the moment this 1200 goes to 5000, let's say this was launched somewhere in uh, I think last GFF, which was August September, Global Fintech. अभी अभी छोटा recent story है. And if at all you spend 2 more years and bring all of them on this platform, why will not buyer app get mutual fund from ONDC? So
But
the
that
success
hasn't
will come in pieces.
even
It
with
will take some
restaurants,
time.
it hasn't happened, right? Restaurants started
Ah,
2 years back. Like, restaurants was an early use case, but I've
yeah.
never heard of anyone ordering through an
Now
ONDC
here
app.
is the understanding that we have got. If it is service delivery over application, it will be a quick sell. It will be early. If the service experience is left to someone else, that is where the problem will be.
Oh, okay, so offline is going to be a much harder because
So your
Zomato
Swiggy's and
has
Zomato,
skin
they
in the
have
game.
control.
Yeah, they
They
have
have
control.
SLAs, they have tag,
Right,
they have
right.
like the leakages. They
Hmm.
ensure that there is a success over every
They
delivery.
provide a backstop that if it's not delivered, we'll
Yeah,
refund you the money, or if you have a
yeah,
problem, we'll refund. Right.
absolutely. And they have
Hmm.
all the possible matrix with them, and they see wherever the matrix is out of control, what do we do about this? That's in their hand. Either to hai nahi na. You have it is logistics partner, it is supplier, if at all, and then there is buyer. Buyer has no control over supplier. That's just not the case. That's why we picked up financial services as the first use case. And then
Makes
we believe
sense.
travel can be the second use case. So this is something which will quickly work. And then obviously there will be a lot of innovations which will happen as and when the journey goes ahead.
So
So it,
the buyer apps have everything in it, or can the buyer app curate and say, I don't want to show restaurants, for example? I just want the mutual fund and the
it's
e-commerce
up to
part.
you what you pick up.
Okay.
Right now, whatever we are building is based on what we have decided, what we want to do. Let's say even if we are compelled to do it, the decision is up to left to us what to give to our customer, because it makes no sense if buyer does not have the flexibility to decide. I mean, I'm not into, if I'm running a payment application and my focus is financial services, that's the category. I don't want to sell,
Food delivery.
your
Right.
biryanis and
Yeah.
sandwiches on my
Right.
application.
Right.
It
Right. Right.
straight away defeats the purpose.
Hmm. 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 So, help me understand NPST as a business. What is the kind of revenue you do currently? What is the split of that revenue? How much comes from which product line or business line?
So NPST's vision is to provide digital technology across financial value chain. Now, when I say uh, financial value chain, let's start from the regulator who has built NPCI. From there, regulated entities, which are banks, PPIs, and BFCs. From there, it goes to fintechs, which is your payment aggregators, gateways, and then it goes to merchant, and then from merchant to the customer. So that's the value chain we believe. So in the first value chain, we intend to be in the entire value chain. So the first one is about being a technology partner between banks and NPCI. So NPCI and bank, or if at all there is any need that we can build something around the regulator requirements beyond payment. So that's where we sit. That's the first leg, and this is where we have majorly licensed and SaaS based model, where we have all the products including UPI, IMPS, Super App, which earlier was mobile banking, online dispute resolution, merchant acquiring stack. We have come up with a great product which is regulatory tech. So that's my next big thing. Uh,
So,
so all
regulatory
of
tech
this,
is for bank compliances.
rec-
Like bank has some RBI compliances, etc. It helps them manage that.
yeah. So around payments, what we believe is the payment ecosystem to secure the entire payment ecosystem. You have cyber security, you have systems which can wrap over your payment software. The other one is the risk engine. So today we have EFRM, majorly fraud risk management system, but these are all pre-transactions. I mean, only if it is allowed by AFRM you can transact. But what if the transaction comes in the system? After that, what would you do? Then there are a lot of compliances. Now, compliances plus the ever-changing digital payment landscape, which compels regulator to bring in several more use cases and several more checks and balances. For that, there should be a single engine, and this is what we are building. So any compliance and regulatory requirement which is required by a bank or a payment aggregator or a fintech to own and operate a payment ecosystem is rectic for us, and that is what we have built. It's a very futuristic solution which is built on the AI/ML engine. So we decided that anything that we'll build will push it to machine learning, so that the predictive and the overall learning of the entire rule based ecosystem is evolved as and when it goes forward. The data will be the decision maker for the future data. So that's how it should ideally work. So yeah, so back to this case. Uh, these are certain products that we have, which either we sell it on license or SaaS based model. Uh, then this piece covers about 20 to 25% odd revenue. The difference between license and SaaS.
SaaS, yes. Is it like license is one-time payment, SaaS is monthly payment? Is that the
So
only difference?
licenses, you have license fee, then you have maintenance fee, then you have support fee to for the uptime. You provide a manpower, you provide a tech guy support team, and then you also have the development fee, which is your change management or your enhancements, all of that. So that goes in a license model. Wherever
And
there are large
in that case,
banks
the
or
IP is with the bank. The IP.
IP remains with the tech partner because it has been given on license model, not service model. So I own IP for every single product that we have. So we are a product company, but at the same time, it has a service layer also, which generates additional revenue here. So that's the license fee. So typically, large banks or large entities who have the huge volume, and they cannot pay by your per transaction model. So they will definitely pick up the license fees. Wherever there is mid to small size bank where they don't believe in investing heavy in the beginning and pay as and when you go ahead, there will be pay per use model. So that's where the SaaS based business will come. So entire investment is done by us, right from the hosted services to the infra to application development, manpower support. Everything is shared. Most of these costs are shared, and then you end up paying a portion of the overall cost. So instead of 1 rupee, you may end up paying just about 10 paise or just about 20 paise uh, of the overall cost. That's the SaaS model.
Okay, got it. So this you said is about 20-25% of your revenue.
Yeah, around that.
And what is the total revenue estimated for this financial year?
Uh, Estimated, though, I don't want to share that number until we come out with the Q4 results. That is still due. But our revenue for first 3 quarters was 153 crore odd.
And what
Other
is the
80%, yeah,
EBITDA in that? Like,
we are about 35%, averaging about that.
wow,
And our
extremely
PAT
profitable.
is about 20%,
Okay, extremely profitable. Okay.
25% odd. Yeah. And uh, so the other major business is where, we generate revenue. So that's the cream of the entire business. That's payment platform as a service. What we have done is we have identified that, for banks and fintech to work together, either the fintech should have the capability to build their own engine and have the capacity to consume what banks deliver, because banks will build what they can for their requirements. However, banks will not build what fintech want, but fintechs are deprived of cash. They are supposed to innovate, and they're supposed to take care of customers. They are supposed to take care of the stories that they believe in, and not the stack which is behind them, which is between bank and them. So there's the second part of value chain, wherein we are trying to bridge the story between banks and fintech. So we have built solutions around payment platform as a service, which is an end-to-end product, right from the onboarding process to transactions to API gateway to about reconciliation, settlement journey, your dispute resolution, your complaint resolution around chargebacks, fund flow. All of that is entirely built by us, and then we give it to bank, and then we give the second extension to the fintech. Now, this is where it plays a role of a bridge. So, payment aggregators or large fintechs or direct merchants, they can consume the services directly from bank, and then we get paid a portion of the cost that they incur over it. So banks will then pay us for the technology, operations, and the platform that we are providing. And the revenue is generated towards the cost paid by fintech to banks. So that's how we operate. So that's
So,
about
as
70
an
to 75.
example, say Bharat Pay acquires merchants and allows merchants to receive payments digitally, and then so someone like a Bharat Pay could work with you for the whole payment technology, and then Bharat Pay can just focus on merchant acquisition, merchant experience, cross-selling loans, etc. to merchants, and you are responsible for the payment part between Bharat Pay and the bank.
Absolutely. Absolutely. I'm responsible for ensuring that Bharat Pay's journey with bank, which is backend, is completely taken care. Every new QR issued to a merchant, their KYC process, the QR issuance, and then the transaction uptime, which should be 99.9%. Then getting the reconciliation done and settlement done. So all of that is taken care in our engine. They will ensure that right from acquisition to providing these services on the application, that is, or
The
lending
customer
or new
experience.
innovations, customer
Hmm.
experience. Absolutely, that is what they
Hmm.
do.
Okay. So this is 75% of your business.
Yeah, seven it, way hovers between 70 to 80% odd, averaging 75.
Okay. 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 Understood. Um, what made you decide to go for an IPO? And tell me the journey of going public.
This was somewhere in 2017. uh, I wrote a mail to bank. I don't want to name them, large bank, that UPI has is the next big thing because it has a merchant story. So IMPS is more about is pay story, but UPI is a collect story. So what will happen is the merchants will be empowered, okay, and obviously seamlessness and getting transactions done on any application that is available. So, I want to be part of the ecosystem. So, beyond being just a technology provider, can we start building this platform for the merchants? I waited for about 1 year. I kept on requesting them. Nothing worked out. Then I realized that this is not a bank problem. This is my problem. And this is every fintech's problem. why, why are they interested? And unless and until you don't have a success case. So, and Google Pay, PhonePe didn't happen until then. So I said, unless and until this is not a success. Oh, I did not answer you on the Beam thing. Again, Beam came into picture, uh, wherein the realization was, you have the banks in the UPI ecosystem, but who will take it to the customer?
Hmm.
Someone has to take it to the customer. They already have mobile banking, and there was very thin difference between UPI app and mobile banking app. The only difference was now you can transact from multiple accounts. So that was the thinking in the banking ecosystem. So for this to become a success, for sure, we needed more players in market. So the decision was taken to launch Bhim and Bharat interface for money and make it a success. And then came other players. So that's how it happened. So I was also gunning behind, stories which can bring in a lot of merchant use cases. It didn't work with that bank. So then I went to a small bank which was looking for a UPI switch. And I said that, you see, I will barter. Okay, I have a larger aspiration around this. I will give you the switch. I'll not charge you for that, but you allow me to do this merchant platform story if I can, build the merchant platform. And then you can go to other merchants and you can bring them on your platform and, transact, and, that there is great opportunity here.
Like you wanted to build a product which would be like a Bharat Pay, which can be white labeled and provided to a bank, and bank can use that to
Yeah, so
acquire
when you say
merchant.
offline, it's like Bharat Pay. When you say
Hmm.
online, you can say a payment aggregator kind of
Okay,
stuff.
like a Razor Pay.
But
Hmm.
yeah, but not majorly, 100% UPI.
Hmm.
That was the thought.
Okay. Okay. Hmm.
So with this story, we also needed funds, right, to invest into such kind of platform. So then this happened somewhere between 17, 18 odd, okay. And then in 18, we decided that we'll need some funds. And then we went to few guys. Uh, you won't believe the first pitch we did was a success, and I got about $5 million commitment that time, somewhere in 18. This is what will be done, but we could not sign the letter. We had to give them the approval. We could not sign the letter to the IB because the other guy said that I will give you at X percentage and the value will be higher, and this is what I want to invest. You do it right now from me, and then you take this $5 million. It will give you better value and, better number negotiating power. And that never happened. And after that, it took us almost 1.5 year odd to keep going to every single person in the market, and no one believed us. No one believed that. Why do you need someone between bank and aggregator? Aggregator तो खुद का कर रहा है ना, वो तू क्या क्या करेगा बीच में? I said
Yeah.
no, that's the problem.
Yeah.
Only those who can do it are visible right now. Those who cannot do it, there are hundreds of such guys, and they just cannot do it. So I want to democratize that system here, learning from what NPCI did. I want to build that system so that anyone can use this platform. And this happened for 1.5 year odd. We were still doing well with our technology business, but obviously, our universe was limited to banks. Our universe was very limited to those who are licensed to use the kind of product that we are using. Whereas my customers, which are banks, were seeing a lot of new fintech coming to them and, asking for the services. Then I said that's the second leg where there are, the audience is has a lot of paying capacity, use cases are higher, and they need these services. So somewhere in 2019 we were almost at certain discussion, and then COVID happened. When COVID happened, everything dried up, and we had to survive. For survival, we decided that we'll get into services business. Will because business was not coming, the funds were not coming. So we went into services business, and there we realized that my first vertical will never help me scale. So if you see our P&L was flat for 2 to 3 years. So 15, 17, 19, that's how the numbers were going. Uh, then, uh, then we realized that, we definitely need funds. And while we're raising funds, someone told us that why don't you raise it from the SME market? If you are so confident about your numbers, and I said we are very confident. I mean, it has only come after sitting in bank for hours together and seeing what the problem statement is. So then merchant banker we got introduced to a merchant banker, and then our requirement was very less, was very small. He said, "You see, you will get valued for not more than 50 crore rupees. But please
What was your
remember
revenue
that
that time?
I think we was 17 crore when
Okay.
we took a decision.
Hmm.
And when we did an IPO that year, we did 19 crore odd. So that was the
There's like
revenue.
21.
2021. We did an IPO in August 21. March 22, I think we were 19 crore. Uh, then, see, I said that my requirement is not more than 5, 6 crore odd. So that's what I'm looking for. 6 crore is more than enough. We just want to launch the product and then we have to monetize it. So he said you cannot go below 26% and you'll get valued at 50 crore. And then there will be pre-IPO if at all there is any fund that wants to come in your, before IPO, do that. It will push your IPO. I said, okay, then we decided to raise fund through an IPO, obviously. Confidence was very high. We knew that this is a success. There is no doubt about it. Right from business model to technology stack, market understanding, everything was available. It was just that push which was needed. And because of COVID, we took a decision that will not delay further. We'll take a decision. We took decision in 2020. The entire discussion was virtual. We were all sitting home, and merchant banker got signed up virtually. Everything happened virtually. Only somewhere in when everything was fine, we met merchant banker once. We met our investor once, for the pre-IPO, wearing mask, presenting it to them. And then August 21, we did an IPO. But there was a very good statement that came from him. He said that people don't worry about the valuation because if you really do well, market will bring you to the right value. So it is 50 crore today. You do great, and trust me, you'll be valued well. You overvalue yourself, then go to market. Market will ensure that you are brought to the right value.
Yeah, right.
So
Okay. Huh.
वो journey. So for us, the journey was ulta. I mean, we never raised funds through debts. We never diluted an equity. We straight away went to an SME IPO, valued at 50 crore. At peak, I think we touched almost 5,000 crore. So we are
5,000
almost about,
crore market
yeah,
capitalization.
yeah,
Wow.
and I think we are close to 4,000 right now. I mean, everything has gone down. The market
Wow.
is not that great today, but ठीक है, that's the we gave about 9,000% return to our investors.
Hmm.
So
And you're
that's
still
our
on
story.
the SME board? Like you did an
Yeah,
IPO in
NSE
the
SME
SME board?
board.
Okay.
Yeah, we got an approval to move to the main board.
Hmm.
We got an approval for both NSE and BSC main board.
Hmm.
I think within next 10, 15 days, we'll be on the main board. We'll
Okay.
be migrating. Yeah.
Amazing. Amazing. The SME board has some restrictions like minimum uh, amount to be invested, or
I
like not
think there
everyone
are,
can invest in an
yeah,
SME.
yeah. So
Hmm.
it is again to safeguard the interest of the SMEs who are in that SME board. Uh, they what they do is if at all your traded value should not be less than 1 lakh rupees. So if so we were at 80 rupees per share, and I think our lot size was 1,600 if I'm not wrong. So around 1,26,000. So you cannot trade in less than 1,600. And then as and when it goes up from 80, we went to almost about 3,000 odd. So, so as and when it goes up, the lot size goes down. So that decision is taken automatically the by the system. So from so we in fact went down to almost 50 lot of 50 shares. This restriction will be clear as soon as we move to main board.
Okay. 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 Fascinating. This valuation multiple, it seems massive, right? So, like
Yeah, I mean we are blessed with high PE for
what
sure.
is the PE roughly?
Uh, P ratio is where, based on the profit that you're doing, your equity is valued. That's how the ratio is calculated, P ratio. Now, what happens is there are multiple factors to it. It's not just about the profits, it is also about what segment that you are in. Manufacturing will have different PE, or services will be have a different PE. And then within services also, what segment you are in. So we believe that our segment is very, very innovative and forward looking, uh, and kind of innovations which are happening, the kind of opportunities available in hand for the company, and the way we have performed back to back, quarter on quarter, and year on year. You know, all of this brings a lot of confidence, and we have delivered everything that we have committed. So our intent is very clear that we want to create an organization, a payment organization. We haven't heard about a payment organization which has gone from India globally. There are, but uh, I mean, very few cannot be named. So can we be one of such entity who takes the digital payment globally? See, we are sitting at an opportunity wherein the UPI has happened in India, okay, and we have straight away gone from plastic card to digital currency, and we have gone to QR based transactions, and that evolution has been brought by Indians. So, and if we are so close to that technology, we are so close to the entire growth trajectory in last 10 years odd, then why can't we be a global company? Why can't we take it to larger audience, and why can't we solve a lot of new use cases? So all of this is a recipe for an organization to create a lot of future and new buzz as and when we go ahead. So every time we have spoken to our investors, we have taken a lot of steps to ensure that it is achieved. During the journey, we have also made some mistakes which we have learned, and then we have ensured that this does not go back to the same problem. And at the same time, what we did was we adopted the main board practice way too early. So we started declaring the results quarterly, although it was applicable on us to do it half yearly. We ensured that our results, we are one of the first ones to declare result in market. So that there is a lot of transparency brought in. We also gave guidance to our shareholders, and we achieved that guidance number. So, and at the same time, we also gave them a lot of visibility around what the organization is doing. I personally conduct quarterly call. There are mistakes which I accept. There are progress which I share, and then listen to the shareholder, take their feedback, go back to the board, present it to board. Believe in creating a very strong board of directors, and then making an effort to going to main board, because then you are open to scrutiny, right? Much larger scrutiny. We want to do that. Because we are so transparent around it. Accountability is also, as part of our value. Then beyond this, uh, there are such similar efforts that we have taken, wherein we have declared in advance that we want to go for QIP, and then deploy funds. So that means we have an expansion plan. We have already achieved certain goals on SME board. When we go to main board, we have a great plan. Although we declared this in Q1, we got the shareholder approval last year Q1 results. We still didn't go for it, because as and when we were going ahead, we realized that there was some challenge with our result in Q3, and then we decided to not raise it, because we wanted to be more transparent and ensure that funds are brought in at right time. We prove it again, and then we take the fund. Not that it is available right now, we'll take it. That's not what our intent is. We shared this insights with our shareholders as well. and then the larger plan around deployment of fund. So that was also discussed. So all of this is a recipe for investors to look forward to NPST, and this is the reason why there's a lot of trust and a lot of value understanding about the organization amongst people who wants to invest. And then we also decided that the moment we go to main board, we will be exposed to larger fund houses and institutional buyers who shy away from investing in a listed company on SME, but they are open to invest into companies which are on main board. So then
because
we
of liquidity.
decided we should have, yeah, that kind of institutional buyer also coming on board will
Hmm.
create a great value for the organization, and that can build a very strong foundation. So that was also one of the decisions. So all of this gives confidence to give
What
that
is
kind of
your
fee.
ballpark P ratio?
Uh, it it went
Last
beyond
if you're
100.
aware of.
By the way,
Okay.
I don't track.
Wow.
Ashish does that,
Yeah.
but I keep money away from me. I just look into business.
Yeah, yeah, yeah. Makes
So
sense.
I think we crossed 90s, 100. But the interesting piece here is, acha, we have also issued bonus, huh? And that to 2:1. We performed well last financial year. We went from 41 crore to 130 crore. And then
Wow.
we gave 2:1 bonus to our
Hmm.
shareholders.
Hmm. Hmm. Hmm.
So yeah, this it used to be a very interesting case that every time if the P would go to 90 in a quarterly
Hmm.
result, the
Hmm.
result would be so great that it would come down to 70. So then again there was a gap, right? Oh, this is happening back to back every quarter. That means there is a space. So then the investor would invest there.
Amazing. I just Googled what is the P ratio for Apple. It's 30. So you are at three times of Apple's P ratio. Amazing. Amazing. Uh,
That's majorly because
There's
we
more
are at the
growth for
growth
you.
stage and
Yeah.
we
Yeah.
we
Yeah.
have
Yeah. Hmm.
Paytech story.
Right. 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 Amazing. Amazing. Thank you so much for your time, Deepak. It was a real pleasure.